time we've no control. If the sky is pink and white, if the ground is black and yellow, it's the same way you showed me. Nod my head, don't close my eyes, halfway on a slow move. It's the same way you showed me. If you could fly, then you'd feel south. Up north's getting cold soon. The way it is, we're on land, so I'm someone to hold true. Keep you cool when it's still alive, won't let you down when it's all ruined. Just the same way you showed me, showed me. You showed me love, glory from above, regard, dear. It's all downhill from here. In the wake of a hurricane, dark skin of a summer shade, nosedive in the floodlines, tall tower, milk crate. It's the same way you showed me. Cannonball off the porch side, older kids trying off the roof. Just the same way you showed me. You showed. If you could die and come back to life, up for air from the swimming pool, you kneel down to the dry land, kiss the earth that birthed you, gave you tools just to stay alive and make it out when the sun is ruined. That's the same way you showed me, you showed me love, glory from above, regard, dear. It's all downhill from here. Real life, remember how it was. I'm G, Michael Jackson, all this shit. Say what up to Maggie, the shoe. Say what up to Penny. Say what up to life and my child. Running up my bikes, running up. Not for me, 18, still in granny six. Take it easy, give me some sweet. Bitch, I might like immortality. This is life, life, immortality.
Hello everyone, my name's Dean. Let's talk crypto. This is where you subscribe for daily Bitcoin updates and technical analysis. We track the price of Bitcoin as a proxy for the cryptocurrency markets at large. Today is February 1st, 2023. Wow. And we had a good January in crypto. We had a good January in crypto and a good January in Bitcoin. And I believe, based off of what the charts are showing us, February may be that much better, okay? Obviously, 50% gains in January, 40%, 30% in some other assets. That's cool. Nothing to write home about, though, okay? That doesn't produce the life-changing wealth or the asymmetric gains that we're expecting in the cryptocurrency space. But February may very well present that type of price action. I'm going to show you why. If that interests you, then watch until the very end. Guys, it's nice and sunny in the DC metro area. I hope you're doing well. Let's get into it. All right. I'm looking at Bitcoin on the hourly time frame. Okay, and a lot of people are saying, okay, this confusing consolidation, the up and down price action is so confusing. Don't know what's going to happen. We got the FOMC meeting, all of these other factors. The economy is pretty bad. Can go up, can go down, okay? Again, we're on the hourly time frame. We have a range. It's up and down. But this is a bad trading strategy. This is not how you do it, okay? You don't try to trade up and down this small time frame range. It's silly. Okay, what we do on this channel and what we advise is to zoom out a bit. Zoom out on the 4 hourly, zoom out on the daily, zoom out on the weekly. look at the larger trend. Okay, the larger trend is really nice and simple. January was excellent. Nice big move up. Okay, January did not produce massive gains, right, percentage wise, but qualitatively, January was a very strong month, because qualitatively, what we did was break through the biggest resistances, right? We broke through the 233-day resistance of this bear market accumulation channel, okay? We broke through and retested, and then broke through and retested this 434-day downtrend, right? Resistance. So everything that happened in January wasn't so much, massive gains, 1000%, 10x or 20x gains, but it was, I'm going to change the trend. I'm going to break the resistances, flip them, not only break them, but retest them, make them support, and then show that I'm ready to initiate a bull market, right? I know a lot of people are saying, oh, this is a bear market rally. We may go a little bit and then reject, and, because this is kind of a fake out on the high time frames, but that's the inability. That just proves an inability to understand what's right in front of you. Okay, the story is simple. If you break major resistance and you flip it into support, it's not a fake out. It can no longer be a fake out. You're basically dealing with levels, and you just conquered a level, and you will continue. That's it. It's that simple. Okay, our stochastic RSI momentum indicator is telling us the same thing. Completely zeroed out, right? Basically gone from all the way overbought to oversold with sideways price action. Okay, everything's telling you this is the move that's going to happen next. A big move, okay? And the other thing I will address is the fact that it is commonplace. It's something that's being parroted left and right, right? People making the claim that $25,000 is the main resistance, and it's basically the next rejection point for Bitcoin. There's no way Bitcoin's getting above 25,000. Okay, I guess we will wait and see. Okay, but remember who's telling you these things. Okay, it's not that people can't be wrong, but they've been saying it. They have many chances to look at the charts to understand them. They're telling you 25K is where Bitcoin's going to reject. If I tell you 25K may not even present resistance, or if it does, you won't even notice it, I won't be surprised if that happens. Okay? So we'll wait and see in the next few days if 25K presents a major resistance, or even a point of resistance or a point of friction for the Bitcoin price. Okay? As I said in previous streams, if you zoom out, okay, a nice zoom out with the log scale on, because you cannot represent parabolic growth on a linear arithmetic chart. If you zoom out, you see very clearly above where we're at right now, there's pretty much nothing. There's a volume gap, okay? So price can run pretty much unimpeded, okay? Maybe we have some friction here at this blue rectangle, this blue level. Otherwise, there's very little resistance. As you can see also on the monthly time frame, you have a bullish cross of the K and D lines. Basically, this chart, this indicator, this momentum indicator, is telling you you should expect a monthly trend up, right? So a few months of positive price action in the Bitcoin price. Really, guys, it's not that complicated. Do your own research. Don't buy everything you see just because everybody's parroting, just because they show up on TV, they do a lot of interviews. They have a lot of followers. You have to do your own research, because honestly, some of the reads, some of the analyses are just so bad. They're just piss poor. Okay, and it's not about being right or wrong. Everybody's right and wrong. That's like the name of the game. If you don't want to be wrong, you're in the wrong business, because we're always wrong to a certain extent, right? It's just we make calculated guesses. We take risks, calculated risks. That's it. It's the art of taking calculated risks. We prognosticate. We try our best to predict what markets are likely to do, and we put bets on it. That's it. But yeah, do your own research, because honestly, like, you have half of the market, big channels doing this, showing you this kind of analysis. No log skill, nothing. People don't even know how to set up their charts, and they have trading programs and they're selling them. It's disgusting. All right. I want to also talk about the DXY. Something I noticed on the small time frames is this may be it. This may be the move that finally breaks this 2-week long accumulation. Okay, pretty much we've been waiting for the DXY to break down from this for, it seems like, forever. But it's been actually only 2 weeks. Again, do you see how time is so distorted? When you're paying attention to the charts, it's not an objective measure of what's actually going on. If you told me that the DXY spent a few months in this channel, I probably would believe you, because it feels like it's been a few months, right? I feel annoyed. I feel impatient. I feel exasperated by it going up and down in this channel for seemingly forever, but that's only been 2 weeks. Okay, so trading psychology note, always remember time, not greed or fear, but time is your biggest challenge as a trader. Understanding and working with time and not letting time best you, okay? Like, you have a bullish penchant. Let's say you have a bullish outlook on the market. You set yourself up, but let's say you just get impatient and you give up. You lost because of the time it took to play out, right? So what I want to show you on the DXY is this. Remember yesterday when I talked about using your stochastic RSI indicator and seeing when, here, let me show you actually, instead of speaking about it abstractly. Let me show you. Let's go back. Okay, let's go into, I think it was the hourly time frame we saw it in. Let's see. No, it was the daily time frame. Yeah. Okay. So the idea is this, and you can basically apply this to any time frame. It's just the concept. Okay. And yesterday during the live stream, I discussed how, look, if you are confused as to what happens next, okay, and the magnitude of this next move, you can simply do this. You can use a momentum indicator like the stochastic RSI. And you can look at the price action, okay? You may not know what's happening in this consolidation. It's not important. It's not important for you to know if it's a WXY, XZ, whatever. Just know it's a consolidation. You can probably put 2 lines between or above and below and channel it, right? And the other thing you should notice that should jump out at you is the fact that as price is going up, momentum is resetting down. This is one clean and clear definition of bullish divergence. I understand most people, most chartists, most analysts, when they're discussing bullish divergence, they're looking at higher highs on a cross. So like if you look at 2 points, right, you can see if it's bullishly divergent. So higher high in momentum, a lower high, or sorry, higher low in momentum, a lower low in price action. And so that indicates divergence, right? I know how people read divergence, but this is another way, very effective way, useful way, practical way to read divergence. Notice the price is going up, Okay, it may be going sideways, but it's essentially slanted up and to the right. The momentum is going down. That is strong bullish divergence. That's basically it only happens in a really, really strong bullish trend where even your consolidations, which should be corrective, essentially still are positive, right? They go in the direction of the trend. Everything goes in the direction of the trend. Even your counter trend goes in the direction of the trend, right? And when I say counter trend, I mean intra-wave corrections, right? All the intra-wave corrections, by definition, should be against the trend. But when you're really bullish, they even slant up, okay? So, having said that, knowing that concept, I want you to look at the DXY. Remember, this works on many different time frames. So the DXY, what it's done on the smaller time frames, on the hourly time frame, is, and it hasn't done this before, you can check. We went up here, right? Making a higher high. And here you have your higher high. And from that, we went down considerably. So basically, what that tells you is this. This is subtle. But what that tells you is your trend is down. Your trend is strong down. And I'm going to show you why that is sort of noteworthy. Because you may be asking, like, yeah, Dean, that's what it does. The momentum just shows you where the price is going. Watch this. Okay, so you have 2 weeks worth of data here, okay? And you're on the hourly time frame. It's not a huge time frame. But look, every time the price goes up, momentum's up. Every time the price goes down, momentum's down. And you can just track it. Momentum up, price up, momentum down, price down, okay? And it's kind of like, because it's a range, it's kind of one-to-one, right? But here, what you can see, and I'm not going to waste your time, but, be my guest, go through. And you can see basically momentum it's pretty much even. When you're sideways, the moves up and the moves down in price and momentum are commensurate. But when you're back in the trend, when you're in a trend, just like we looked at the bullish trend, just flip it on its head. Basically, now it's the story that this chart is saying and that this indicator is saying is that the trend is now bearish. Because as I'm moving down, okay, and now I'm moving back up, I'm not moving up as much in price. I'm moving much higher in the momentum than I am in price. There's a divergence. There's a discrepancy between what the momentum is saying and what the price is saying. So a big move, basically momentum resets back to higher levels where price only goes up a little bit. That means the trend is really, really strong. And even when the momentum goes up to reset, the price goes down. I.e., this is trending down. And that's my read. It's subtle. I understand. But based off of that, I'm not at all, I would not at all be surprised if this eventually broke down today or later today. Okay. I know that's subtle. Yeah, this has been tricky. And, I actually thought this was going to break down. And I thought this was going to break down. But because of that bearish divergence, strong bearish divergence, I would call it, on the small time frames, I believe that this is going to be it. Okay? This is going to be it. You have on the 15-minute time frame, you're completely overbought. Okay, so there's no more room going up on the 15-minute. On the hourly, you're getting to overbought territory. Okay, on the 4-hourly, you are crossing bullish. I don't think you will. I think you're going to stay open. Okay, that's just my thoughts on what's happening on the small time frames on the DXY. All right. Akanksha says, hello. What's up, Akanksha? Good morning. Akanksha says it's FOMC hype all around. Yeah, that's how people trade. When you don't really have a grasp on what the charts do, you grasp for straws. You look at whatever you can. And yeah, I'm sure that the FOMC meeting, because most people put a lot of weight into it will affect the dollar. And the dollar, by extension, will naturally affect the risk on assets. Yeah? But the trade and the way to trade and to set up is not to all of a sudden wake up and try to trade the FOMC. It's just, you look at the data presented and you prepare yourselves accordingly. And, what we've been seeing is just that this is likely to break down sooner than later. Okay, I understand as 4-hourly bullish cross looks menacing, but don't be surprised if you get something like this. Okay, likely, what is likely to happen, especially based off of what you're seeing on the hourly and what you're seeing on the 15-minute time frame. Like, the upside move for the dollar seems very limited, given that this is a 1, 2, 3. This is a corrective move, and corrective moves are limited in how high they can go. And yeah, even just looking at Bitcoin itself and crypto itself on the smaller time frames, we can do that right now. Let's go on the 4-hourly. Let's see. Let's actually go on the hourly and the 15-minute. This is likely, like we said yesterday. Here, let's get rid of the momentum indicator so we can illustrate this. Let's go on the hourly. So, like we said yesterday, I think that whatever this is, it is a flat correction and it's complete right here. Okay, that's the easy read. Why is it complete right there? It's because this is a clean and clear impulsive move. Okay, it's a 5-wave structure, easy to read, 1, 2, 3, 4, 5. And every corrective pattern, trend, ends in 5 waves. It ends in an impulse. Okay, it doesn't always have to be 5 waves. Sometimes it could be a zigzag. That's rare, but typically ends in 5 waves. It ends in impulse. And so here you could probably read this as a WXYXZ, right? A 333 flat correction. Okay, so what happens after that? You get obviously your AB base. Okay, because after you have this move right here, in order to change the trend, right, you have to put it through an intermediate kind of processing whereby the trend changes from small time frame down to small time frame and high time frame up, right? So that's the story there. So everything I'm doing as a trader is I'm preparing, having read this, I'm preparing for the move up from here. Okay, if this goes like this, that's fine. This in some way, shape, or form is some sort of 2 degrees of AB basing and a pivot. So we can zoom in actually to that region. 15 minutes. And I know that confuses a lot of people, but if you know how to, if you understand, forget knowing how to trade charts. If you understand the idea behind what a chart is, you understand what technical analysis is, period. You're not trying to mix technical and fundamental, because you understand that one, technical analysis by definition includes every single last component, variable, everything that you can imagine is included in the buying and selling habits, the trading habits of people for that asset, right? The open trading assets for that asset. Like, you don't need to look outside. And so you can read the story. The story's complete in the chart. Obviously, there could be changes, immediate changes that completely break charts. Those are rare. Those are black swan events. Those are fundamental changes that completely unexpected and completely break a chart by either, completely devaluing the asset or something like that. Do you understand? Like, but otherwise the trends can be seen in the charts. So when you understand technical analysis, you're not grasping at straws and hedging and trying to read all this news. And all of these YouTube analysts, of which I'm one, and Twitter, these Twitter crypto folks, they'll tell you, technical just look at the charts. Like, they'll say, show me the charts, I'll tell you the news. And those same people will tell you, oh, I'm not gonna do anything until Powell says this, and then we interpret how he speaks about the basis raise or whatever. Like, they're talking out of both sides of their mouth. But again, do your own research. Everybody's gonna do whatever they do. They could be as fraudulent as they want, but if you follow, that's your fault. You have to do your own research. Use your own logic. Like, if it makes sense to you, then, by all means, more power to you. But if it confuses you, that the same people are telling you, read the charts. Everything's included in the charts. They always say that. They're like, yeah, I'm a technician of the charts. I don't really look at the news, and I encourage my students to do the same. These same people will tell you, no, it's going down because of, this raise or whatever. It's like, do your own research, figure it out. You can't, this is the age of figuring shit out for yourselves. If somebody has to tell you what is and what isn't, you're lost. And you'll never be found, because at the end of the day, you can't rely on anybody else. You have to use your better judgment. You have to use your common sense. So looking at this as an AB base, I would say, just taking a stab at it, that my initial break of structure starts here. My secondary B wave is like so. So I'd say this is my first degree. I'd say my second degree is this zigzag. Okay, I'd say this is my second degree. And I would say this is my pivot. This is my pivot. I'd say this is my breakout. I'd say this is my first degree, second degree, pivot. 2 degrees of AB basing and a pivot. Okay? I like the look of this as a breakout. Okay? It's nice and long. It has a big wick to the downside. Breakouts usually do have that. So that's my read. Right? No FOMC necessary. Let's see. Okay, so that's Bitcoin. Let's move on. Because today I actually have to pick up my son later on, so we don't have too much time. Looks like Cardano's starting to break out. Let's zoom out a little bit and see what this looks like on the higher time frame. So we're on the hourly time frame. Okay, this sticks out to me as a nice flat correction, a running flat correction. Actually, let's see. If you're looking at Cardano on, let's even zoom out a little more. I've said this before. This looks to me like 1, 2, 3, 1, 2, 3, 1, 2, 3, 1, 2, 3. This looks to me like some type of leading diagonal. Okay, this is a nice, strong move. Again, even your consolidations are bullish. That indicates a really, really strong trend to the upside, right? This is going to go up massively, right? This is one large consolidation right here, okay? And it starts here and it probably ends here. And this right here is the AB base. AB. Yeah, probably somewhere here is the AB base of all of this. Sorry, the AB base following this move right here. Okay, so I think that it looks very good for continuation, right? These moves up are going to surprise a lot of people. They're going to be a lot bigger and last a lot longer and be a lot more volatile than a lot of people think. I can't count how many serious quote-unquote, respected quote-unquote analysts are saying 25K is the top of the move. It's crazy. It's crazy. All right, this nice flat correction, 2 degrees of AB basing and a pivot probably happened over here, okay? But that's what I'm seeing on the charts. That simple. This is nice. This is very nice. Look at this. Okay, bonk. The meme coin, my favorite shit coin of the year. This looks to me like an A wave, a B wave, an A wave, a B wave, and probably somewhere here a pivot on the smaller time frames. Okay, but this is quintessential textbook reversal pattern where you get in a nice a range, and you put in your consolidation. You can look at this also in terms of Wyckoff accumulation, right? If you're of that persuasion. But this is very nice. You're showing really strong support here. Every single time you touch this bottom, you bounce off of it, and you put in a nice, strong move up from the base, okay? I'm very excited about that. I'm going to keep saying that until it really rips and everybody's talking about it. And I'm like, yeah, I told you guys. I was looking at the cause. Now we're enjoying the effect. But I was looking at the cause, excited about the cause, right? Low market cap, strong move down, good, nice consolidation, tight, consolidation, showing strength actually in consolidation. Okay, dent. Here is the move I see. A, B, C. I think, yeah. I see that is my flat correction. I see this as my 5 waves, 3 waves. Now, I don't know. I want to say this is my AB base. That's a lot of AB basing, but that's possible. It's possible, especially for highly volatile assets. In any case, this is going up. Going up, going up, going up. Dodo already getting started. This is the flat correction I see right here. Another running flat correction, followed by some AB basing. Dogecoin. This is, honestly, what are people looking at? These are running flat corrections, meaning you're consolidating up and to the right. The trend happened. The trend cooled off in consolidation. The consolidation produced even more upwards momentum. Upwards momentum in price. But the momentum indicators are going down because in this consolidation, you're resetting. Basically, you're cooling off here. A lot of people misread it and say, well, because the price has gone up, we need to cool off. This is just too crazy. We need to calm down. January has been a bit too hot. They are not ready for February. Not at all. And actually, if you look at this in terms of pattern analysis, you can see a nice inverse head and shoulders breakout retest situation for Dogecoin. It's extremely bullish right here because this is quite a lot of consolidation. And if you talk cause and effect, the more you consolidate, this is a 4-hourly time frame, the more you've been going up and down, accumulating orders, the more fierce your effect or your breakout will be. Okay, Ethereum, that consolidation, again, you're seeing a channel that's up and to the right. It's slanted up. I think it ends right here, and afterwards you get some nice AB basing. Okay, so this is the trend. This is the intrawave correction that corrects this trend, and this is the continuation that you're about to get. You're at the base of the channel. Okay, just basic support and resistance analysis. Litecoin. I'm reading this as the flat correction right here. And that would be 1, 2, 3 waves, 1, 2, 3 waves, and then the 5 wave conclusion. But again, you're going up in price, all while correcting and resetting the momentum. Okay, and you can check, use your indicators to check. But here you go. You went up in price, and you reset that momentum to 0 at the end of that consolidation. So, extremely bullish. Okay. Our reserve rights. I feel like in this case, our correction is like this. Okay, it's not up and to the right. This is an example of a regular ABC correction followed by some AB basing right there. Okay, so not slanted. It's not showing extreme bullishness, but it's still going up. SHIB. This is a triangle. Okay, this is a triangle. Do you see this? 5 legs of a triangle. Okay, according to Elliott wave theory, triangles are A, B, C, D, E. Every single last leg is a 3 wave move. So 1, 2, 3, 1, 2, 3, 1, 2, 3, 1, 2, 3, 1, 2, 3. Okay, and I think you get some AB basing after that. So 1, 2, 3, 4, 5. Yeah. So A, B, C, D, E, and this is a symmetrical triangle. Looks like a symmetrical triangle. And it looks like you're about to print some really strong bullish divergence on the 4-hourly time frame right there. It's about to confirm. Synthetics looks like it's about to go. Again, you put in a flat correction. The past 10 days you've been putting in corrective price action. These nice flat corrections, okay? In synthetics case, it's orthogonal. It's just straight. It's not slanted, but it's still bullish because it's an intra-wave correction to this trend. Intra-wave correction, continuation of the trend. Okay, so that's what I'm seeing on synthetics. You got your AB basing right here. Another potential triangle in Tron, okay? For the past 15 days here. 1, 2, 3, 1, 2, 3, somewhere in there. 1, 2, 3, 1, 2, 3, 1, 2, 3. Okay, either a triangle. Yeah, I think it's a triangle. It's one of those ascending triangle, right? With the flat top. But I think it's an ABCDE triangle, and then your AB basing is right here. Okay. Very, very bullish. XRP, here's your flat correction. 1, 2, 3. It's a running flat. Okay, AB basing right here. Very bullish across the board. People are not ready. The 200 IQ, big brain move is to get in the longs, look at the high time frame, zoom out, get in the longs, and go away. Not to obsess on the hourly time frame, the 15-minute time frame, the 13-minute time frame, and look at what's happening day to day and speculate whether it's going to go up or down because of the FOMC meeting. Like, the charts are telling you. If you can't read them, then it's your problem. The charts are very clear right here. Very clear. I think Zilliqa is in a 333. A, B, C, D, E. That's how I'm reading it. It's a 333 correction. And then your ABC, your AB basing is right there at the end. But that, super, super bullish. At the end of the day, you have, these are bull flags essentially, right? Because you have flat corrections. After big impulse, you got a flat correction. People are like, oh, okay, January was crazy, but, February is going to be the cool down. everybody learns what a bull flag is and a bear flag is when they first start trading, but apparently people can't read. People are chart illiterate. Don't be chart illiterate. 3 waves. I think this is 1, 2, 3 waves, and then this is your final impulse. This is another flat correction, the double 3 on V chain, super bullish. It's almost indistinguishable in pitch from the actual impulse. Okay, this is the definition of a running flat, super bullish correction. I don't know if I've ever seen that extreme of a running flat. Look at the angle on that. It's only slightly less acute than the actual impulse itself. There's nothing not bullish about this. Nothing. Again, you're going into consolidation, okay? Because nothing goes up in a straight line. Everything needs consolidation. In doing so, what did you do? Let's go on the higher time frames to really illustrate this. So you go into consolidation, yeah? Consolidation, if anything, should be down, okay? Down and to the right. It should be against the trend. It should create, a difference in price. It shouldn't continue to go up. But you're so bullish that you're correcting up. I really, really, really want to highlight that. If you look at this chart, it's so clear. It's clear as day. You're correcting up. This was the trend. This is the correction after the trend. You always get some correction, intra-wave correction. The trend, the correction to the trend is going in the same direction as the trend. And your momentum indicator is telling you as much. That was the correction. This is what that is saying. Just when you learn to read the story in the chart, you can understand exactly what's going on. It's not that confusing, right? It's not that you're going to know exactly where the price goes at every moment in time. It's not that. It's just on a higher time frame, you can get the gist of what's going on. And that gives you a lot of ability to speculate in a profitable manner. Okay, theta. I read this as the correction. A nice flat correction. This is my subsequent AB base. Okay, not as bullish, but still quite bullish. You can see some confirmed bullish divergence right there. Okay, and that's classical bullish divergence. A lower low on the price, a higher low on the momentum. Okay, so that is likely to continue like so. And when it happens, again, I will repeat, most people won't be able to catch it. It'll happen just like we always talk about. Well, lately we've been talking about the big move of any trend on any time frame happens more quickly and takes less time, much less time, than the consolidation of that trend. The big move, the move that actually takes you from A to B and like you went from this price to that price, usually happens so fast, but then the consolidation before and after take the bulk of the time. Okay, I'm going to re-illustrate this. I talked about it yesterday, but I think it's worth repeating. Andy says, "Hey man, thank you for your videos. Please have a look at Filecoin." Definitely, Andy. I did not forget what I said yesterday. I'm gonna do that. Thanks for joining. I know it's the middle of the night in where is he? In Bali, I believe. Bali. Let's look really quickly. And here we go. So I just want to illustrate this. This is really important. And, these streams can be long. So I don't imagine everybody's watching every single last second. But this is a really good point. January lasted 31 days. Okay? In 31 days, we went and did about 50%. Okay? In that time, if you count, you spent about 11 days here. Let's just count that because I forget how long it was actually. Okay, so 10. Yeah, let's just say 10 days. Yeah, 10 days. Okay, so 10 days. You spent 10 days in this sideways price action, up and to the right a bit, but essentially sideways. You spent 6 days in this sideways movement, and you spent another 11 days for January in this sideways. So 11, 6, 10. There's only 31 days in January. 10 plus 11 is 21. 21 plus 6 is 27. Right? Yesterday I had 25. But anyway, 27 or 25, it doesn't matter. The idea is the same. Of 31, why can't I write? Of 31. 27 of 31 days going sideways. The idea is that when the price actually does move and we go from, where we're at 23 to maybe 40 or 50 or 60 or whatever, it's going to happen so fast, relatively speaking, most people are going to miss it. This is why you got to figure these consolidations out. This is the key to this. You're not going to catch this. Very unlikely that you're catching the actual movement up. The movement up is elusive. It's so fast, relatively speaking. So 4 out of the 31 days made the bulk of the move. Again, 4 out of the 31 days of the previous month made the bulk of the move. The rest of the time was spent going sideways, essentially. So the big brain 200 IQ move is to recognize the larger trend, get involved, and get out of the way and let it play out as it plays out. Because you're not going to know exactly when this comes. The timing is not going to be perfect. And if you wait until it happens, it's likely going to be too late. So again, what you want to do is read these on a high time frame, high degree of probability, take a calculated risk, get in, leave it, rinse and repeat. Is this accumulative or is this distributive? If it's the former, you leave it. If it's the latter, you divest yourself. But if it's accumulation, right? If it's just intra-wave, if your momentum indicator is completely bottoming out and telling you, oh, we're going back up, then you leave it and you do it again and you actually keep your entries. You don't overtrade. This is the most helpful thing I can possibly tell anybody, because if I knew this in 2019, I probably wouldn't even be doing this YouTube stuff because, I don't know. Maybe I would. Maybe I wouldn't. I don't know. But I would have made it already. I would have made it huge. Huge. Okay. Let's go back to where we were. We were at theta. I think we did theta. We were on the 4-hourly. Yeah, we did theta. Okay. We were on Telcoin. We're not going to take too much longer, but we're going to get through all the altcoins. So this is clear. 1, 2, 3. That's your this is your impulse, and this is your correction. This is your AB base. Okay, that's an easy read. These are simple reads, not too complicated. And also, look, if you're unsure, there's always another way to look at it. That's the beauty of trading and charting. There's so many different ways to crack the code and, look at the puzzle. You can also look at this in terms of an inverse head and shoulders. Okay? And this is a breakout, and this is a retest of this neckline, right? You retest it. Okay, so that is Telcoin. Matic, very clear. Very clear. That's your impulse. That's your intra-wave correction. That is your AB base, okay, and you're retesting that high time frame resistance as support. Super duper straightforward, simple. Your momentum indicator is telling you as much. You're completely zeroed out. Obviously, you're going up. Okay, it's kindergarten level difficulty in terms of trying to read what comes next. DYDX. Alright, this obviously broke through this main resistance. Question is, are we going to do something like this and retest it, or was it already retested on a smaller time frame? I don't really know. To answer that, probably go into smaller time frames and look. I think that was it. Right here. Reason being is if you look at the time it took for this impulse and the time it took for this retracement, they're about the same, right? This 5-wave move and this 3-wave move, in terms of time and price, they're about the same in time, and price is probably a shallow 0.382 retracement. Yeah, I would venture on, if you want to be cautious, the move or the read is for this to go up. That this is an AB base, this was your interwave correction, this level is done. That's it. Okay. That's what your momentum indicator on the 4-hour or on the hourly is telling you anyway. So that's what I would do. I would not imagine, and even if it does come back down, remember this is really, really high time frame resistance. You're only coming back down to retest it if it wasn't retested on the smaller time frame here. Remember, we're on the 4-hourly, so you may not see all of the smaller retests. Okay, so that's DYDX. Let's go back to the 4-hourly time frame. Harmony, look at this, very nice 45 degree. I talked about this. Gann analysis is big on angles. 45 degree angles, very sustainable for an uptrend. You come up and you're retesting resistance as support in a nice flat correction. This is a run-of-the-mill ABC flat correction. Do expect continuation. None of this is complicated, my friends. What's complicated about these reads is not the fact that, you know, you can't make sense of them if you have basic understanding of, you know, chart patterns and, you know, anything, support and resistance. If you just know basic, you know, fundamentals, principles of how to read charts, you know that it's going up. The question is, can you withstand the time element? And I always say, it's the time element that trips most traders up, right? They can read an uptrend, but they're like, well, it's taken too long. And something in them just cracks and says, I need some activity, and because it hasn't happened yet, and I expected it to happen, it must be going in the opposite way. And they trip themselves up. Don't be a slave to time. Make time your slave. MOVR. Okay, very beautiful retest of resistance as support. You broke that resistance, represented by this purple box, right? This falling channel. You put in a 1, 2, 3 wave move, right, as a retest, and in so doing, you obviously have to put in an AB base, and that AB base retested almost to the penny the top of your resistance as support. Okay, sometimes it works out that way, where your support and resistance is respected so precisely, and this is one of those instances. Very beautiful bullish cross. That's bullishly divergent, mind you, because lower low here and an even low here on the 4-hourly time frame on your momentum indicator. This is going up, and it's going up now. Not a difficult read. The difficulty was, oh, how long is this going to take? Oh, another AB, some AB basing. I didn't expect that to happen. Do you see what I mean? Self-key looks bullish to me in that I believe this was your, here, let's zoom out for a second. This is super volatile. I think what happened, and you can only see this on the smaller time frame. Yep. So on the hourly time frame, I think you can see it. You put in some AB basing over here. This was an A wave. This was a B wave. It's corrective because you go up and you come back down almost below the origin. Not almost, but you break the starting point of your initial break of structure. So that's corrective. So your AB basing starts here, and that's what you got here. It's a little confusing because you go up to come back down. It's not a fake out. It's just corrective price action that happens when you're changing trends. And here, once again, you see strong bullish divergence. A lower low in price action, higher low in momentum. And that's it. You know, these are not difficult reads. I will repeat, these are not difficult reads. Sometimes it's hard, it's tough, it's tricky. This isn't the case. This is a clear uptrend, as clear as day. Question is, are you disciplined enough? Are most people disciplined enough to just wait for it to happen? And yeah, sometimes it's that simple. But just because it's simple doesn't mean it's easy, right? A lot of people can't wait. They're too impatient. In their minds, they have a story. And that story is, if you don't go up now, you're not going up. And, you know, they can't conceive of prices being, you know, too high. Like, for them, they have a definition of what is a reasonable thing. And that may not have anything to do with a chart analysis. It's just, you know, their personal bias. So understand where people come from and how you yourself create your personal bias for how you read the charts and what you expect from the charts. Okay? And look at that. Would you look at that? Look at that. What do we freaking see? Beautiful. We got it, guys. We got it. That bullish divergence, that strong bullish divergence on the hourly time frame played out. It showed something's fishy about this. Like, you've been going up and down, up and down, up and down, but something was different about this. And what do you know? Look at that move. Look at the violence. If this isn't confirmation that you're going to moon, I don't know what is. What time is it? It's 2:41. So all our FOMC people are out and about. Again, you don't need to wait for Powell to make his proclamation to know that this is intra-wave consolidation, intra-wave correction. And this is the trend. And this eventually will break down. Again, it's a time issue. We've been saying on this channel, this is a bearish consolidation. It's like, this is a trend. This is intra-wave consolidation. It's going to break down. Question is when. Most people get impatient. Oh, no, it's not breaking down. Is it going to break down here? 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 Everybody gets impatient. You just have to know that you're impatient. You know what I mean? Like, when you're talking about trading psychology, you have to know what you tend to do. And not do the opposite of that, but understand yourself and say, okay, it doesn't matter if I get impatient. I'm still going to just do my analysis. And if my analysis is my analysis, I'm going to take my risk, my calculated risk, and follow through. And if you follow through with that, you're up, and you will be up a lot more. But you're not scrambling at the 11th hour trying to build 4 or 5 figure positions after, you know, some old white guy talks about what he thinks, you know, rates should be or something like that. Like, absolute garbage. All right. Andy L says, that's crazy how fast those impulsive waves happen. You're right. Time is playing with us so badly. Emotions and FOMO are so hard to control. Yeah. I mean, time is the biggest challenge. It's not greed. It's not fear. Honestly, like, I don't remember the last time. Obviously, fear plays a part. Greed plays a part. But I think time is really what skews our stuff, our calls. All right. Let's have a quick look at Filecoin for Andy. And then I'm going to call it a stream because I have to pick my son up. Filecoin's right here. Okay, so Filecoin, let's zoom out because I haven't looked at this in a long time. Okay, I don't know that this is a full chart, but I'm assuming it is because it's a Binance chart. Big downtrend, obviously. And And let's see. Let me measure something. Yeah, no. Okay, I think this is an intra-wave correction right here. It's a little tricky. I don't know what the hell is going on the higher time frame. There's just not enough data, so I can't say. I just see a big downtrend, and then I see a recovery. But, the nature of the recovery vis-a-vis the downtrend, I can't say. On the smaller time frames, so daily, zooming in, very good sign that as you gain here, and you do here, what you can see is what I've been talking about, that running flat correction. This is it right here. This is a running flat correction. So as you put this correction in, your momentum decreases. This is really, really bullish. So basically that means you're going to pop out of here, okay? So small time frame, super bullish. And by small time frame, I mean daily, okay? This is likely to break out. Now, if I go on the weekly, on the monthly, I just don't have much data on this chart. But on the small time frame, on the daily time frame at least, I think this is going to follow the rest of the market. High degree of confidence this follows the rest of the market. Trend, counter trend, reset the momentum, you're going up, okay? But I can't really characterize the larger chart as, doing this or that because, I just don't have enough information. But on a small time frame, it's very bullish. That's what I'll say about that. USD is dumping. Yeah, I love it. I fucking love it. Goodbye, DXY. It's been real. Goodbye, DXY. We've been waiting to lose this level for ages, it seems. I feel like I've waited a lifetime for it to lose this level. And remember what this means, guys. This level right here is not just some random old level. It's a high time frame level. This support that we're losing right here is 240 plus days, almost 250 days of support, right? And that's pretty much the length of your bear market accumulation. So you're basically breaking, just like Bitcoin and most cryptos breaking their bear market accumulation to the upside, this is doing the opposite. That's what you should expect. So this really does confirm the start of strong bullish momentum in the cryptocurrency market. I'm super excited. We're not doing fortune telling here. We're not guessing. We're looking at trends. We're looking at causes, and then we're speculating in an educated way on the effect. That's all. This is not like, a dice game. And a lot of those big accounts that have been telling you today and yesterday and many days from since today or from today that we're going to dump and to wait for 10 to 12,000 Bitcoin, and not just that 25K is the top. Like, guys, moderate your content. Just like you watch your diet, watch your consumption of information. Just don't take anything in, and if you do, understand what you're taking in. I think that's important because there's a lot of garbage out there in terms of like analysis. There's a lot of garbage analysis, like just poor, sloppy, and sometimes I wonder if they're just lying because it's so bad. You know what I mean? In any case, I gotta pick my son up. This is great. Hope we continue to moon, and February is likely to be historically bullish, even more so than January by our high time frame analyses. All right, take care. I'll see you tomorrow.